afternoon. This is Neil, Simpler Futures. This is Monday, February the 13th, kicking off the week of one busy week. Let me tell you, CPI tomorrow. We got retail sales and then PPI and Philly Fed and VIX expires Wednesday, OPEX Friday. It's just, So we should start with the obvious, and that is with that much volatility, nobody knows. And I don't even feel comfortable, with, honestly, much of trying to predict, what we're doing. We last week, as you know, was a tough week, right? We started the week looking for wait patiently for a pullback. Well, the pullback came, but it was all the way at the tail end of the week before it did. And my goodness, realistically, if you waited for the retracement, then that's fantastic. But like I say, realistically, I know that had to be really difficult to possibly impossible, which means that if you paid up any time in front of that, you just, took heat. And if anything, we can just kind of look back on it, remember and learn from the tendency of that occasional, it does work, pull back toward the end of the week prior to OPEX week, then we get this reversal back up like we're witnessing now. It's 100 off the Friday lows, So starting off with a bang, obviously, I went to from here even, I go to the trade tab, the options chain, and we see there's plus or minus 100 still into the end of the week, right? Plus or minus 100 from here still into the end of the week. So here's what you can do, right? So this quant screen that we use for kind of levels for targets on a weekly basis. It started 4100s up today, obviously off that, and so the H1 on the top is basically 4200, 42 and a couple of pennies, but basically 4200, and then the second puts it up at 4270. Plus or minus 100 is definitely possible, doable, from here up that high. H1 and 2, though, if you come over here and see historical 62 weekly periods analyzed, right? And the probability of H1 just touch is sub 50%. And close up there is, 20%. H2 touch, 20%. And then close up there is extremely low likelihood. Then we go about the same on the downside, right? L1 touch, sub 50. L1 close, about the same, 20%. L2 touch, very minuscule. And L2 close, not probable. You can see the marks across the top here, right? So what does all that say? Well, it says it could still test higher on this, volatility that starts tomorrow, by the way. The volatility really starts tomorrow with CPI. But whatever it does, it comes back in. That's what it really says, right? It can reach up, but the probability of touch and especially close up at these or all the way down to L2s is just, don't look for it. It's a volatility event that comes back in, is what that all reads, right? So, okay. So here's the deal. If up, then you're going to target 4203, and then to be safe up here, just call it 4250. 50-ish. And then if that's the case, it does not stick. It comes back. It comes back in. So these are levels, especially up here at like that 4250 area up there, you're looking to fade for it, to come back in. And by the way, the idea is that, it'll, whatever, if it does that on the top right, then that's a Wednesday midweek shuffle high kind of thing that comes back in. So the question would be, to me, moreover, really, is where's it going to close this week? And I've got that being down here. And that's like, down in the 4,000 area. Certainly 4,100, maybe down at 4,000. Remember we put those flies on for our 4,100 OPEX, pin? Well, it was, thank you, by the way, in the comment section on the last video that we did last week, it was brought to my attention that there is some outstanding open interest at the 4,000 strike down here for Friday morning, the AM expiration. So what I did was I added some 4,000 SPX put flies 25 wide down at the bottom down here at 4,000. So the 4,100s we already had on for a while, and they were definitely working. Those things are making good money, but I added some 4,000s. So what this kind of looks like is a volatility event for the week that presses up, gets rejected like a Wednesday high, and then gets slammed back down or brought back in, I should say, like Thursday for the it's like it's permissioned finally to really move away from this basic pinning in here as of Friday morning. With that AM settle behind us, then it's okay to finally be, kind of released. Because, see, this has been a march up from the DSOPX down here, or end of quarter expiration, 38, 50s. Remember that, right? And it's been all bull since. So somebody's got the dealers, the market making, liquidity providers have the other side of all this bull activity, right? Have to sell all that long call exposure to you wanting to buy it, and then turn around and buy ES hedge against it. And when that SPX is, going off the board Friday morning, then you can dump the hedge and let this thing, and then it's free to really move, right? So if that's the case, then we get, starting tomorrow, CPI, crazy price movement, whatever that's going to be. It looks like this thing is kind of poised to pop up. And you can see this wedge that I've kind of got it drawn into. If that's the case, it starts to pop up. You're going to target 42.0, call it 3, and 42.50. But you don't get comfortable with these prices up here. You want to let this get ready to, fade this up here and bring it back in for the Wednesday high up there, to bring it back in. Well, we'll talk Wednesday, right? We have videos again on Wednesday. I'm back with you on Wednesday, so we get to talk about it then for plan for the rest of the week. But I've got in mind what we're going to be talking about then is going to be bring it back in for the OPEX settle, and then it's okay. As of Wednesday, if it's up there at prices that we're pointing to, let me just say this. I'm going to be putting on bearish exposure. So that should tell you enough, right? I mean, if it's up there on Wednesday, I'm putting on some bearish exposure. I mean, I'm talking about I'll be putting on like 39.50 and maybe even some 38.50, but certainly some 39.50 SPX flies out into March, right? To give it a chance to really come back in and breathe. So, all right, for now, that's probably enough, right? Because clearly, with this much volatility on the horizon, it doesn't make any sense for me to try to stick you spot on to, a target. Last week, I think, was a little easier because we were, just looking for a little bit of pullback toward the end of the week. and I think we called it 4260 or 4060 area, and certainly that was good, but I mean but it took all week to get back there. If you somehow were patient and waited for that, then obviously this is going well in your favor. My caution to you now is I wouldn't get too carried away with this past like Wednesday on a midweek kind of a high kind of thing. That's the new update caution now as this thing is starting to uptick as we discussed last week. So, but from lower, remember, had to wait, let it come in for the uptick. Now here we are. It did pull back. It is up. It looks like it's poised to show us some sure enough volatility starting tomorrow. And then I want you to get careful for what's next, and that could be the pull the rug out from underneath and down she comes. Right. So okay, good trading. Be with you again here midweek. Till then, good trading. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me